Hey everybody, this is David Skrika, stock chart of the day for December 6th. I'm doing this on the 5th, but it doesn't really matter because the market just closed. I'm doing this after the close at 4 p.m. and whatever. So it doesn't really matter. So if you, back in July, I did this video on my favorite stock, Fubo, which is, and I kind of do some hyperbole. I didn't put the ticker in there. I'm going to do that in this too. It's kind of look, you have to use a little bit of clickbait in this business, right? So basically, um, you can see that's what's going on here with um, uh, uh, with Fubo and the whatnot. So like it has gone up about 20%. I'm up probably 40% on it because I got in a little lower than the price I talked about here. I did sell my call, sell some of the stock when the earnings weren't that great. Look, the revenues were good, but they kind of had a larger loss than expected. And then I re-entered the position, and I'm kind of stock wise, I'm like the same position I was, and probably call wise, I'm a little smaller. But I was like, you know what? I've been so bullish on this thing. If I don't take advantage of a potential big breakout, I'm going to really kick myself. And I'd rather lose, a $500, $600 or $1,000 in options than, than miss out on this thing. So what I wanted to show you quickly with Fubo is one thing I talked about in this video is when you do these maximum pessimism trades, I talked about Moderna yesterday. The issue with Moderna is Moderna doesn't have any catalysts, right? Moderna's like main drug, COVID drug, is dead because no one's taking COVID vaccines anymore. And they're losing tons of money. And they had a spike during COVID and it's done, right? And and they don't really have anything in the pipeline. So a stock like Fubo does for two reasons. Number one, Fubo's growing at about 20% annualized a year. Even with that last quarter, they're shrinking their losses and look like they're going to be profitable by 2026. And they have this, obviously they have this lawsuit, right? And like longer term before the class action suit here is that Fubo does have or antitrust suit. Fubo does have long-term gains because they are basically the primary provider for soccer and European football. Well, that sport is growing, and the 2026 World Cup is going to be in the United States, Canada, and Mexico, right? So, and two of the places where Fubo operates is the United States and Canada. So, and if you want to watch the Premier League games, this is your service to use. So they have those longer term catalysts, but they also have this catalyst of the antitrust suits. And if you go look at the one that the NFL lost recently, and a bunch of others, the Spirit JetBlue merger getting squashed, it seems that these companies are winning these. So I want to show you something quickly. This is a recent article which just came out about a week ago, just over a week ago. You can see that United States, the Justice Department and 16 states back Fubo in this lawsuit. So to keep the injunction. So the injunction, just for those of you who don't know, means that Fox and Disney and these companies that want to do the joint sports service, they can't do it until the antitrust suit lawsuit is over with. And that doesn't start till October of next year. I think the prudent thing for all parties involved is for some kind of settlement, allow Fubo to carry this package as well, and then move on. And that's it. And then maybe give Fubo a small settlement because Fubo is also charging that these companies overcharge them, hinder their ability to rebroadcast. And that's a lack of competition, right? We all want more competition. So, and we all know what's going to happen if they did this sports streaming package. They'll all conspire together. They'll have I think the first rate's going to be like $40 a month. And then in like 2 years, when they've kind of gotten rid of all the competition, they'll make it $100 a month. So even though being a libertarian, this is where I think you need the government involved because that's the way these companies operate. And these companies are kind of like oligarchies, monopolies, et cetera, right? So anyhow, so you can see that happening. And like, look, it's so obvious they're just ripping off Fubo too with the sports because Fubo does these sports things, right? They do local sports. If you actually they do discounts for if like say you're an Orioles or Yankees or a baseball like season ticket holder. So like if you even go look at their logo venue, let's go look at Fubo logo. You can see the Fubo logo right here. This kind of like oranges thing. Look at the venue logo. It looks almost exactly the same with the orange kind of color scheme. Also, too, it has a U in it, like Fubo FU. How many like words have U's in it, right? Venue, Fubo, it's kind of similar pronunciation wise. So it's a total ripoff, in my opinion. And again, for those of you who aren't aware, what Fubo were looking to do is they want to do what's called a skinny sports package. So what that means is they want to have a package where you can subscribe to like for $50 or $60 a month, and rather than their full package, which is all these cable channels for $100 a month, and you can just watch NBA, NFL, etc. And it's not like the Sunday ticket, you get everything, but you'll get access to a little more sports, and that's the only thing you can get. And a lot of people just get streaming services. I know I have the $100 a month Fubo package, and I just basically watch Premier League and NFL on it and college football, right? So that's what they want to do. So you can see here, Fubo had this base. So you can see it had that spike. That's the announcement that they won the injunction. And then it kind of went down on earnings because the earnings were a larger loss than expected. And it has a large short position. So I think the shorts are kind of fighting here. But you can see I really like this basing pattern. And if we can break this kind of like $2 to 220 level, I think we can really move higher in Fubo. Go back to the highs of last year, 3 to 4. And right now, if we look at the valuation, you can see Fubo, I talked about yesterday how Moderna was trading at, um, uh, 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 you know, over 2 times sales. Fubo right now is trading at 0.4 times sales. They're going to have about 1.6 billion in revenue. So their issue with them is they really need to start losing less money. You can see their annual income for last year was minus 287 million. They have to cut this down. They have to basically start becoming, profitable at some point. So they have to stop losing 20, 30, 40 cents, or you see 54 cents a year. I think this year it's going to be closer. That's like the last fiscal year. I think this year it's going to be closer to like 30. They have to get to where the point where their cash flow and positive and profitable. So, but again, they have the catalyst. They're growing. They have this potential. I think they're going to win this lawsuit, or I think hopefully I think the best solution would be some kind of settlement happening, and then go on from there. So you can see this gap down. That was the news of the lawsuit. So even though they've won the injunction, Fubo is still trading lower than after the gap down of losing the suit. Now, one issue with the company is you can see there's 334 million shares outstanding. They're diluting. At the beginning of this year, there was 300. So they're diluting about 10% a year right now. And of course, that means that they have to make 10 or 20% a year more in earnings just to keep up with that. And part of the reason they're diluting is some of it they're paying on down debt, and some of it they need the cash because they are burning through cash. Like I said, they're losing, you can see they're losing $287 million a year. So they're raising, like, do the math, you raise 30 million shares at say $2 a share, that's $60 million. That's, about a quarter of your loss. That's how they're subsidizing the losses to not, issue more debt. So anyway, I still really like it. I still like this basing pattern here. Like I said, since I did that video in the summer, it's up 20%. I'm up about 30 to 40% on it myself. I just re-entered an option trade. That's for paying subscribers. So let's see what happens. The issue is that their earnings won't be till the end of February. But one reason I kind of wanted to buy it was two reasons. This stock chart here, like, let's quickly draw a trend line, and we can see that Fubo, boom, like this short-term downtrend is actually today's action broke it on the close. It had kind of broke it the last couple days intraday, but you want the close to break it. So it's broken the short-term trend line. It's got to break about this 180, 185, and it got up to 183 today to kind of really break that and then get back to this high. And then if it can break this high, I think we can get back to the $3 to $4 range. So anyhow, so that's still one of my favorite stocks. I think it's cheap. They're going to go towards profitability. They have a good product. Like, I use Fubo and I like it a lot. And they have the potential catalyst also with the antitrust lawsuit. So I'm going to leave it at that. This is our stock chart of the day for Friday. So I hope you've really enjoyed these. I know that sometimes that these kind of things get less views than my regular ones, but like this is the whole point here of this kind of service going forward here. We want to talk about everything from macro markets to micro, et cetera. And usually I don't give away my stock picks, but I just figured with this, like I said, I've liked it for a while. And I've been long for it for long it off and on for a while. And it's one of my favorite companies. So I don't mind giving, say, one away. It's kind of a sample of what you can get. Everybody take care. And that's it,